Good morning, good evening, or good day. Welcome to Global E-commerce Experts, and welcome again to the Expansion Challenge series. Thanks very much for joining us. Hope you've enjoyed the episodes up through till now, seeing the GE Expansion Challenge. This week, we're going to be concentrating on VAT, your tax requirements to help you grow in the UK and the EU. We're going to spend some time talking about VAT, sales tax, how it works, the European rates, how they differ from each of the different countries across Europe, how you can use something called fiscal representation to your advantage, and also ways that you can defer your taxes to avoid the cash flow implications of paying your taxes on the as you import the goods into the EU. So this webinar is specifically for e-commerce sellers who are looking to grow into the UK and the EU. So welcome to you all. My name is Ricky Hooker. I'm the General Manager here at Global E-commerce Experts. I've got more than a decade's experience in e-commerce and 20 years understanding of EU and international trade expansion. We're currently growing over 2,000 sellers here at GE using our tried and tested expansion pathway. And we'd love to be able to help you grow your business into 500 million new e-commerce buyers. So let's see where things fit in. For those of you who have seen our webinars, have watched our webinars in the past, you'll know that our well-trodden, tried and tested expansion pathway, if you use this blueprint to grow your business, you will see success in the UK and the EU marketplaces. We're running through a 20-odd week process of talking through every single stage of the expansion journey to give really deep insight as a free resource to sellers to understand how to grow in the region. At this early start of the expansion pathway, we're talking through the compliance side of getting set up before you begin to ship your goods into the region. We've been through many of the parts of the market research, the feasibility, translating your listings, and now we're into the real depths of the nitty-gritty parts of the compliance elements of what's required to grow in the region. We've talked a little bit about the responsible person service and addressing your products. We talked a little bit about other compliance elements. This week, we're going to be concentrating on your tax implications of the sales tax that's generated from selling your goods, and indeed any of the other tax implications relating to selling overseas. We, of course, are concentrating these on sellers who are from overseas. These are sellers from outside the UK and the EU who are setting up to trade inside the region. So let's get stuck straight in. What exactly is value-added tax? Well, in some countries, VAT is known as sales tax, but VAT is the tax that's added at the point of sale of your goods and at the point of import of your goods. So the total amount of tax that's paid is the amount that's added on from the point of which you import the goods to the point of sale. So in effect, you offset the tax when you bring the goods into the region against the tax of when you sell them, and you only pay the tax on the value added. The client pays, or the end buyer will pay the tax on the end sale price, and that will be offset against the tax that you'll pay when you bring the goods in, unless you're able to take advantage of some kind of tax deferment scheme, which we'll talk about later on in the webinar. So VAT is value added tax, and it's what registered traders in Europe add to the price of goods that they sell. Now, really importantly, as opposed to some other countries around the world, including the United States, value-added tax is included in the sale price. So if an item is listed for £20 or €20, that will include the VAT included at the prevailing rate, unlike many countries around the world where your list price or your ticket price, your sticker price of $20, for instance, would then have the tax added at the checkout. That's not how it works in Europe. You calculate your selling price to include the tax. So how does it work? Well, as I mentioned, the businesses can recover the VAT that they pay on their purchases, or in your case, your imports, and then charge VAT on your sales. So you pay the VAT to the tax authority, and the consumer pays the tax on the purchase as part of that purchase. So you offset one against the other to mean that tax is only being paid on the value added on the transaction. Of course, the tax authorities need to understand how much goods you've brought into the region or how much you've purchased if you are in the region, and offset that against how much you've sold. So everyone who trades in the UK and in the EU, in each of the individual countries, has to file a VAT return, a tax return, to the relevant authorities in each of the countries that they sell the goods. So that's important. If you sell in one country in the EU, you only need to do a tax return in one country. But if you sell across the region, then you'll need to do, in the most part, we'll talk a little bit later how you can combine those, but in the most part, you'll need to do a tax return in the countries that you sell. Across the course of Europe, of course, things are a bit different because unlike the United States, for instance, we're working with multiple different, separate, independent countries as part of a European Union rather than the United States, as you have in the US, for instance, or single countries that you might find in the Far East or indeed in Oceania. So customs duty is payable on goods that are coming into the country, into the region. That's normally handled by your customs broker on the way in. They'll handle things like duty and import tax as you would have into any other country. But on top of that, you will need to pay VAT on top of the customs duty, the excises. So when items are imported into the UK or into the EU as two separate entities after Brexit, although the UK remains in Europe, of course, it's a separate country. We've covered that in lots of our other webinars. You'll pay customs duty taxes. These are not reclaimable. These are taxes that are payable when you bring the goods into the region, and are tariffs based on the commodity code or the type of good that you're bringing in. On top of that, the customs agent will calculate the VAT, the value-added tax, as a percentage of the inbound customs duty, including the taxes that you've been paid on the inbound. So it's the total inbound cost to include the duty. You'll have VAT payable on top of that. Each of the countries around Europe have different VAT rates. That tax rate is set by the government in those countries. So it's worth knowing because, as I mentioned earlier, your retail price, your sticker price of your goods will need to include the tax rate in the country that you sell it. And that can differ from 19% in Germany right up to 23% in Poland, or even 25% in some countries of Scandinavia, like Sweden, for instance, where if you're operating across Europe as a seller, or you set up and plan to offer, those rates will differ hugely between countries. So the lowest rate in Europe is 17 or 18%. The highest rate is around 25%. It differs between countries. Normally what you would do is have your ex-tax price that you'll know as a seller, and then add the tax rate and perhaps create a sticker price point for each of the countries that you sell in around the EU. The actual rates vary between the countries, and the guidelines on them that are set by the government in that country. So registering for VAT, this is when you're doing that tax return, as it were, every month or every quarter, depending on the country. So depending on the type of business, you'll be required to register for VAT, and that gets you what's called a VAT number. It gives you a registration number, and you'll be able to use that for all of the transactions that you have to ascertain what you've sold, what you've purchased, how much tax has been paid on the inbound, and how much tax has been paid on the final sale. So in effect, depending on where you're going to sell as part of your growth strategy, where you're going to import your goods and where you're going to store your goods, we'll talk a bit more about this in a second, you'll be able to work out from there where you need to get a VAT number. Now, if you only intend to sell in one particular country, say the United Kingdom, for instance, then you'll only need a VAT number in the United Kingdom. If it's your intention to sell across Europe, say on Amazon's Pan-EU program, then you'll need a VAT number and a registration, and of course a tax return in each of those countries. Now, don't panic too much, because it's agencies that can handle this for you, all from one place for all of the VAT numbers. But nonetheless, you'll need to be registered for VAT, for sales tax, in each of the countries that you're selling in the broad sense. So let's talk about import VAT and invoicing. This is the tax that you're going to be paying when you bring the goods into the region. For a resident seller, say a UK seller that was selling in the UK, this would be the purchase price of their goods from their point of manufacture or from their point of distribution. They'd be paying the VAT on what they buy the goods for. For a seller from outside the UK or the EU, then the tax, the import, the VAT is being generated at the point of import. So it's payable at the same time as you're importing the goods into the region, and is calculated of the cost of all of the items, including the tariffs that you're bringing in. That means that you'll need to create a tax invoice on the inbound, normally called a commercial invoice. This is what is your the price in which you're declaring as part of your shipping in paperwork. This is where you're declaring the cost price of your goods, of which the tariffs and duties and taxes will be created. And that will be based on the type of commodity code and the way that you do that. It's really important that these numbers are accurate and consistent based on the on multiple imports, because these numbers are being fed in to the tax system using your VAT number. Now, it's worth noting that if you were to perhaps compress the price of your goods at the point of import, you will of course only increase the amount of value added tax, or the difference between that number and your selling price. So one way or another, you'll be paying the tax. So you need to be careful to make sure that the number that you're importing the goods in, the price that you're truly paying for the goods, is an accurate representation that's consistent across the board. So the invoice that you provide and create as the commercial invoice at the point of import is hugely important to the way that your tax returns are created later on. Most countries will expect a tax invoice to clear customs, let alone for your VAT. So everything that's relating to your tax compliance, to be legally compliant for VAT, is going to be dependent on this paperwork coming in. From that point on, it's very likely, if you're non-EU based, that you're going to need some kind of tax representation from an agency. And the tax representation is where somebody on your behalf will collect up the information on request of the goods that you've imported and the goods that you've sent out, and they'll then offset those to be able to help create your tax returns, and they'll submit those to the relevant tax authorities of the countries that you're registered to using your tax number on your behalf. Okay, so representation is going to be important because these people know the regulations and what's required. They know the nuances of how to make sure things get through. They know what you need to be compliant and legally, fiscally compliant, so you don't disobey the rules of each of the individual country. And they can work on your behalf in partnership to make sure that you're able to get those things in correctly. Now, some countries demand by the rules fiscal representation, which means somebody's handling your fiscal affairs, not just filling in your tax return in those countries. France, Italy, Netherlands, Spain, Poland, for instance, demand a degree of fiscal representation to make sure that that somebody is looking after your tax affairs in the country to make sure that they're correct. For the other countries, it is possible for you to do it yourself, but we would thoroughly recommend that you have tax representation where you're working remotely, and especially where you're running a busy business in another country. So there are some options when it comes to selling overseas. There's some options when it comes to how you can make your tax affairs slightly more efficient in different countries, and there's certain ways of offsetting some of the inbound taxes against the outbound in some places. So you'll find that some of these are quite attractive when it comes to reducing your working capital that's tied up in tax charges at the point of import. For some sellers, that makes a lot of sense. There are some downsides to it, and we'll talk about those briefly now. Now, in the Netherlands and in the United Kingdom, we have what's called a tax deferment scheme. What that means is that when you declare the value of the goods at the point of import, you can, through special arrangement, defer paying the VAT until you sell the goods rather than paying it at the point of entry. Not all countries around Europe offer this, but the UK and the Netherlands in particular happens to be where GE has its warehouses, funnily enough, for 3PL. those countries offer a VAT deferment scheme, which means once you're signed up and you're accepted onto the scheme, as you bring the goods in, you can use a deferment number that's been allocated to you, much like your VAT number, to be able to defer the VAT until the point of sale. Now, for some sellers where they're bringing in a lot of goods, certainly of a high value, that can mean a huge difference to their working capital arrangements, whereby they haven't got money tied up in the inbound VAT. They don't have to pay it until they've sold it, and they've got the money on the outbound from the eventual buyer. So it's a really important thing, and a very big reason why many sellers will use the gateway to Europe through the Netherlands, NL, as we've got on the slide here. Now, in the UK, that deferment scheme is called Postponed VAT Arrangements, PVA, and it means that you can entirely postpone the VAT if you're signed up for that. If you've already got a VAT number in the UK and you're selling from outside the UK, I urge you to get in touch with your VAT agent to make sure you're signed up for PVA. It makes a very, very simple and very much reduces your working capital requirements bringing goods into the UK and the EU. There's one other really important part of your tax arrangements when it comes to tax of selling overseas, and that's something called one-stop shop. Now, one-stop shop is a European tax arrangement, which means that you can collect and pay VAT in one single country on behalf of the other countries around Europe. Now, for an Amazon FBA seller, if you're choosing to sell on Amazon, that won't help you because in a one-stop shop is only valid in the country that you're storing the goods. So if you're using Amazon's Pan-EU program, for instance, Amazon will, on your behalf, be storing goods in all the different countries around Europe. That's why they'll demand that you need a VAT number in each of those countries. If, on the other hand, you're selling yourself, B2C, maybe from a Shopify site or from eBay, and your goods are stored in one particular country, say, for instance, the Netherlands, in GE's 3PL facility, and you can sign up for something called One-Stop Shop, which allows all of your tax to be collected in the country that you're selling in. And the Dutch government, on your VAT return in the Netherlands, will then distribute the taxes around the different countries around Europe on your behalf. For most of our sellers who are omni marketplace and are selling on multi different marketplaces, it's typical that they've got stock stored one way or another, especially if they're selling on Amazon, in more than one country. So it's a slightly less of a useful route to selling than using the VAT deferment schemes through both the UK and the Netherlands. There is a similar VAT deferment scheme in France, which doesn't work in quite the same way, but does allow you to, in the broadest sense, does allow you to defer the VAT in a slightly different way. In the Netherlands, it's worth noting that you do have to raise a bond of around €5,000 to the Dutch government to be able to be valid for tax deferment. Something certainly worth considering in your strategic plans as you're growing in the UK and the EU. But there are a number of different arrangements, different schemes, and this really highlights why you should really get yourself a tax agent who can give you the best advice based on your forecast of where you're going to sell, how much you're going to sell, the countries that you're interested in selling in, and what have you. Amazon, of course, offer their own VAT and their own tax arrangements for some sellers right the way across Europe. The downside of that scheme, of course, is not open to all sellers. It's only free for the first year, and after that, you're kind of on your own unless you pay, and it's all very well and good until something goes wrong. So we've talked a little bit about these tax agents. Someone who can handle taxes on your behalf and provide fiscal representation in the countries that you need them. Clearly, as you can imagine, as part of the expansion pathway, this is a really big piece of the offering that GE has to its clients. So we're offering VAT compliance on a monthly, quarterly, or annual basis. That depends on the country that you're selling in, rather than a choice. Some countries only require them once a year, depending on how much you're selling. Some countries require them quarterly, and some, again, depending on sales, require them every single month. Much of the data that is required will come from the online marketplaces themselves. For instance, Amazon Seller Central has a very comprehensive tax collection and depositing part to its software, and will handle all of the data processing from your inbound invoices and your sales that have come from, for instance, the online marketplace. We'll process those, compute those, make an evaluation of all the UK data, and then we'll submit the VAT returns for you, depending on that filing frequency in the country. We'll provide a degree of consultation worth pointing out that that's not something offered by the free Amazon service. And again, all very well and good until something doesn't quite go right. And we can liaise on the with the tax authorities on your behalf. And importantly, for fiscal purposes, you'll be able to use our UK address in the UK to be able to handle your fiscal affairs, not your product compliance affairs. That's part of a different service that we've already talked about in a previous webinar. And we can generally provide assistance for you when it comes to your tax affairs in the country that you're in. Now, we're not talking about personal taxes here. We're talking about product taxes. At the point of talking through this webinar, you're not liable for any personal taxes or corporate taxes within the country that you're selling, because on GE's expansion pathway, you don't have a corporate entity in the countries of the UK or in the EU. It is possible to set up like that. That's not the advice that we give to sellers. We advise them to sell and remove those funds back to their home country. So let's see. We're now at the point where we've done our market research. We're at this very exciting point in growing online in the UK and the EU. As I mentioned before, 500 million online buyers await your goods. We've done our research. We've understood the feasibility of what we're doing. We've understood where you're going to source your products from. And we're now broadly, give or take, we'll cover some other bits and pieces next week. We're broadly compliant to be able to sell. We're very nearly ready to be able to push the big red button of that marketplace launch. Before you can do that, and we're going to handle over the next couple of weeks, you're going to need to understand, where should I be selling, and what platforms should I be selling, which marketplaces, and how do I get my money out when I start selling? So you need to understand how you're going to work with the different currencies around Europe. Broadly, we're talking about pounds sterling and euros, but there are some other currencies around Europe you'll need to handle, in particular some of the Scandinavian currencies. Understand how you are going to extract your money back to your home country, pay your own taxes, and pay yourself a wage, and how you're going to choose the type of platform that you're going to sell on. So next week we're going to talk about the platform itself, and then we'll get ready to press that great big red button to launch, start shipping your goods into the UK and the EU, and enjoying the success of this hard work. Up until now, all we've been doing is research, planning, and strategic actions. None of this is insurmountable to any seller. Some people do it in as little as 14 days, right up to a couple of months, depending on how fast you can invest in the process. As expansion specialist, we're ready to help you with any step of the journey. Doesn't matter whether you've just started or you're already on that journey. We'd love to help. Great. So if there's any questions, happy to handle those now, or in particular, you can email your questions to expand@globalecomexperts.com, or join us on one of our social platforms at any point, on Facebook with the Ecom Experts, on Instagram, Global E-commerce Experts, and you can pose your question on there should you wish. So I urge you to take a look at our YouTube channel. Just search in YouTube for Global E-commerce Experts. You'll find all the historical details of the expansion journey that we're talking about, as well as hundreds and hundreds of hours of free content to help you grow your business into the UK and the EU. We've also got an ebook that you can download from our website as well. So lots and lots of resource there to be able to help you to grow online. We're also happy to talk to you face to face. Please get in touch. Our telephone number's on the slide here. You can call us on our US or our UK number. Our expansion team are based here in the UK. We are +5 of Eastern time for a US seller. So we're +1 GMT here in the UK. And we'd be delighted to help you book a call to help you talk through how to help growing your business in the region. Many thanks for attending. Don't miss next week's installment where we'll start talking about marketplace selections. Thanks for listening, and I'll speak to you next time.